What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and today it's not really a daily review purely because this week has been the most disgusting week I've witnessed this year, I think. So I haven't really been trading at all. Obviously, I didn't post yesterday. We've had all the elections, all the interest rates, and obviously it's Friday tomorrow. So yeah, I haven't really been involved this week, so I thought, why not get that up-to-date range video done? I've been meaning to do this for a while. Also, the up-to-date range video on my channel currently is my most viewed, so it'll be nice for you guys to come and see a little bit of an updated version of what I'm getting from it. So we are going to start on dollar as per usual. Now, do mind, the ICT did state that using the dollar for up-to-date range isn't as ideal as using, say, the actual currency pairs themselves. But nonetheless, we're going to do everything we've done in the last time, which is just marking out the high of the past 60 days, which is right here. And remember, we're starting from the first day of the previous month. So that's why I have this marked out on the 1st of October. And then I also want to delineate the low. And then what we're going to do is we're going to split this range into quarters just to see where we are in terms of the up-to-date range. So you can see we've just took out that high, making new highs above that 60-day period. And now what I want to do is I also want to mark out the 50% level of this range as well, and the 25% level, because price should be able to refer to these to help us get an idea of what it can use to help work its way into the premiums and discounts accordingly. Now, due to how the higher time frame and how much of a consolidation we're in, it is very difficult in terms of thinking about where price is actually going. And as you can see, for the past year, 2 years, 2023 and 2024, price has just been whipping back and forth, and we're still inside that range. So price isn't actually going anywhere. It's still within a range. Now, don't get me wrong, we are still obviously, there's still obviously trades we could have got in and movement. It's just that we're sticking very much within a clear defined trading range, and more specifically between this low and this high. And even if we split this up into quarters, you can also see how we're only at the 50% level of that range, and we've just passed that. So if price is to trade on higher, as far as I'm concerned, that means that this 25% level right here of the past 60 days, starting from October, past 60 days, if we're in this premium, I'm expecting price to be able to find support at this level and continue to trade higher and run into these relative equal highs up here. So this is a potential draw on liquidity for price, for buy side liquidity. So I am going to mark that out. But obviously, the same could be said about the discount, in that the fact that we've just taken out that 75% level, the fact that we've traded through the 50% level and haven't had a retracement or a run on stops is also very telling that we can expect a pullback, because when price trades through a 50% level, you tend to see a run on stops. What's a run on stops? It's when we get a deeper retracement, and we haven't actually had that. Yes, we got retracement here, but when I talk about deep retracement, I'm talking about, price really running back on itself. And that's why these two lows right here are looking quite interesting to me, especially since we've just grabbed buy stops above the 60-day range. So although there's relative equal highs up here, if you've been watching my videos for the past 3 weeks, you'll also know that on the 3-month we have just traded into this PDA right here, this bearish order block on the 3-month. So with that taken into account as well, and the fact that look at how volume's respecting that currently anyway, it's not really surprising for me to see price behave in this way around such a strong level. 1 second, let me go to the daily again, and I'm going to just do that. And yeah, so you can see we ran stops on the back of elections, took out buy stops above here, even traded into this level, I believe. Yeah, we just traded into this low, which is a breaker, high, low, high, and then you can see today we've had a very big rejection away from that high and have started to trade lower. And also you can see it's looking like, well, we only have 1 hour left, but it's looking like we're about to close below. Remember, this is that 3-month level. So just to make things a little bit clearer, let me just mark out these on our display on our screen. So we've got a 3-month bearish order block here, and I'll move that to the right in the middle. We have a 60-day high, which is significant because of IPDA data. range, which we've just ran. And then we also have a daily breaker that we've traded into right here. Bearish daily breaker. So these are 3 PD arrays now that we've traded into and would expect price to want to turn at. So I'm going to get rid of these highs just because I want to see dollar push on lower, and I have been wanting to see dollar push on lower. But we have the 3-month bearish order block, which we traded into here, and I thought, okay, this might be the end. But this is what I mean when price does this. I did speak about this last week. It will trade into it once, it'll come out, and then it'll run it one more time, and then price will start to attack the lows, and then we want to get in as price is trading through the breaker. So if this is correct, then what we're seeing here, if my theory is correct, that means that this is literally what's happening here, with that being the 3-month bearish order block and this just being price action in general. And if that's the case, that means that we can move into next week and into Friday expecting a lot of downwards pressure and price running on lower, back below this 75% level. So how are we going to use the IPDA data range to our advantage? Well, first, let me just get that. Let me make that blue because I usually have my buy side liquidity blue. And do be patient with me, guys. Don't forget to drop a like, drop a comment, blah, blah, blah. So that means now I'm looking for price to see if it can get back below this 75% level. Remember, this is the 75% level of the IPDA data range. Once we're below that, I want to find resistance at this level. So let's say Friday, Monday or Tuesday trades below there. Once price returns back to it, I would be looking for shorting opportunities on dollar with the expectation to then run to our 50% level where we have a fair value gap, and ideally to start hunting into this discount and maybe trade into this breaker, low, high, lower, low. So I'm looking for price to try and get down into this discount. Now, we don't really need to think about this yet. Right, first we need to get to that 50% level. If we can't get to that 50% level, obviously we can't get down to this this breaker level. So I'm not really too concerned about that right now. But as of now, we can look at PD arrays below that 75% level with the assumption that price does want to hunt down there, and look at that for south side liquidity. So we have relatively cool lows right here, very nice, which have now formed. So it'd be nice to see if price can come and run those stops moving into Friday and into the new week. Let's go to the 4-hour. And you can see our price has come off this, and I am liking the look of this displacement, and especially at this 3-month bearish order block. As far as I'm concerned, price shouldn't need to rally again. We traded into it once, made the high, made a low, made a higher high. Now I'm looking for that displacement to the downside. I want to see price start to run now, moving into the Friday. Let me double check if there's any news tomorrow. Now obviously this is easier said than done, especially in conditions like this. But tomorrow we do have high impact news, and it's the Michigan consumer sentiment at 3 p.m. So yeah, nonetheless, we can really break price down now on this level. So what are we looking at? This is our 75% level. We're looking for price to get below that, and then obviously we have relatively equal lows below here, and then any kind of imbalance that we may want to trade to. There's a very clear imbalance right here, just below the 50% level. Now, I'm not saying price is necessarily going to do it tomorrow, but this gives us a draw for price to trade down to, assuming we are bearish. And you'll see our price starts to make its way down there, assuming we are now bearish. Now, what can add to this? Well, we have clear displacement to the downside here. Once we took out this low, we have a breaker. These down close candles make a breaker. So we can now draw this range out and move it into the rest of the week and into next week. Price shouldn't need to trade back above here. It should act as a breaker. It should act as a bearish breaker, and price should struggle to get through it if it's going to rally back into there. So moving into tomorrow, say Friday, sorry, if we rally back up into here, I'll be looking for shorting opportunities with the expectation for price to drop lower and start filling this gap, because this is a volume imbalance. There's no trading that happened here. So I'd want to see price try and fill that. But more importantly, I want to see price trade through it, because once that gets through this imbalance in price, it should use it as resistance. And that will be like almost confirmation for us to expect price to continue running down to our next target, which was in this discount. So that's how I'm using the IPDA data range currently on dollar. I do believe this run up was all manipulation, and I do think it's a part of that move I was talking about in terms of how price delivers when it creates a high, low, higher high, and now I'm waiting for that displacement. Now, one thing to note is that between this high and this low is what we'd call the breaker. Now, obviously, the breaker is huge on this time frame. And what you can do, and I'm not going to suggest doing it, but what you can do is you can actually short as price is trading through the breaker. So maybe once we get to the 50% level and price is looking a lot more bearish, we might be more comfortable doing so. But you can actually short as price is trading through the breaker with the expectation for it to run to its imbalances, etc. So I hope that all makes sense. So basically what I'm expecting, I want to see lower prices on dollar, but obviously this week's been disgusting. So let's now look at GBP USD's IPDA range. We're going to do the exact same thing. I've already got them marked out, I believe, and we're doing the same thing. We're looking at the last month, the first day of the last month, which is here. And then we want to cast back 60 days, which I've already done. So I want to look at the high of the past 60 days, and we want to look at the low of the past 60 days. And if you haven't watched my last IPDA range video, which is my most popular on my channel, go check it out. Go check that out if you want more, in-depth understanding of how it's done. But that's what we're doing, and then we're doing the exact same thing. I'm looking to mark out the highs and the lows of the range, and that just gives us something to work with. So you can see how much of a discount we're in right now. But we're at the 50%, we're just below the 50% level. And obviously if we're expecting dollar to fall lower, we want to see CAM price trade higher on pound. So that means we'd expect some kind of expansion to the upside, right? So I'm going to also mark out the 25% levels as well. Right, so, and you can see, this is quite interesting. Look at how price is finding support at the 25% level. Yes, we've wicked into it, but price is refusing to trade below there, which is very bullish of price. We're also trading into a bullish order block right here. And again, it's the same thing. This 25% level, or you could call it the order block level, it's the same thing I was just talking about, just reversed, obviously, because we're trading a different pair. So price came down, created a high, create a lower low with the wick, and now what we're expecting, we want to see if price can push higher, and that's what we're seeing happen right here. Low, high, lower low. So we want to see can price now push higher. Now don't get me wrong, this drop is very steep and this is very deep, which is why we might find that pound struggles to get up there, but nonetheless it should still apply. Furthermore, we do have a breaker that we traded into. This is like this last up close candle. If we look at the high of that, did we trade into it? Yeah, we just tapped into it. So this is the last high before the down move that caused this massive expansion over the past 60 days. So this is more reason as to why we're expecting to find support at this level and want to see price trade on higher. So we traded into a breaker, we traded into a bullish order block, we traded into the 25% level of the past 60 days, and we have dollar also supporting the opposite. So moving into Friday, what does that mean? Well, now I'm looking to see, okay, can we get above that 50% level? And once we do get above that 50% level, we should be able to find support. We drop our stop loss just below it, because price shouldn't need to come back down below that 50% level once we're above it. And then what we're looking for, imbalances or swing highs. And voila, we have a beautiful imbalance up here in the premium that we can use as a nice target for price. Now this is obviously easier said than done, and price could obviously go against me and I could be completely wrong, but if it's supportive, then there's no reason we should be doubting ourselves. Similarly, we have a breaker. We haven't traded through it yet. As soon as this high gets ran, I'll be happy to use this as a breaker. So as price trades through here, I want to see price run through it. And then as we're trading through it, we might be able to look for some kind of longs with the expectation to trade up through these highs, these highs, these highs, these highs, these highs, and then fill our massive imbalance that we have in this premium. And then we want to start thinking about where price could be heading to next. And if it gets that 25% level, it's very likely it can run up into these highs. But I'm not going to be too concerned about that, not until maybe the horrible month of December, which is creeping up on us, guys. But nonetheless, that's how I'm looking at price. So if we want to be more specific, or use the lower time frames to our advantage, we need to see, okay, where's the lowest now we're expecting price to trade if we are to be bullish? Well, what we can look at is this massive block right here. Now if we are bullish, this should be an order block in the waiting, as in as soon as we trade above that high, this down close candle right here should become from interest rate should become a bullish order block, meaning that the 50% level shouldn't need to get traded through. Yes, we can wick through it, especially on a daily. However, generally speaking, we should be able to find support at this level on lower time frames. Now obviously we've wicked through it already, there's an imbalance here already, but ideally I'd like to think that price will be able to find support above this and won't get won't come back below this low, because as far as I'm concerned it shouldn't need to, especially looking at this kind of the way that price is moving up here and this imbalance and the fact that we've already wicked through it, it's been traded through, and look at how volume's sitting above there. Ideally price shouldn't need to drop below it. Now don't get me wrong, this week has been horrible to me, to the point where I've called a certain level and then literally an hour after my upload to YouTube, price went completely bazookas against it. So take everything I'm saying with a grain of salt this week. But if we do find that it's finding support and price is staying above it, it's all the more better for us to start looking for potential setups to run us where into our ideal highs that may want to get grabbed moving into that Friday and into the new week. One thing to take note of, however, there is a breaker. We've got a low high, a low low. This massive up close candle is a breaker, however, and you can see our price is spending a lot of time down here. You see how we kind of fiddling around here, you know, it didn't, although we ran it and we came back into it, you know, and then left it, it's not the cleanest. You can see that pounds struggling quite a lot, but eventually something should snap into place. Maybe the back off interest rates next week, I believe, or I don't know when pounds interest rates are, but my point is some kind of sentiment ideally will help push pound and make it rush up into the highs, assuming dollar does want to trade on lower, because we've grabbed stops below here, grabbed our sell stops, and based off everything I just showed you on dollar, I now want to see compound support that theory. Furthermore, we have a nice inversion fair value gap between this low and this high. If we drag that right through, this should provide support. So even if we did come down here, price shouldn't need to any lower than that 50% level. I'm not involved whatsoever, but I mean, like, ideally we don't even take out this low, because that will show a nice level of bullishness to me. And looking at this on the lower time frame, this consolidation is quite nice, but obviously we just have to wait and see. But yeah, hope that will make sense. It's just a matter of time, and again it's a matter of whether dollar is willing to trade on lower and, you know, reach down into its discount, especially this massive gap it's left floating about. Is that price point? That's very interesting, isn't it? Yeah, massive imbalance right there, but it makes sense, you know. First time witnessing what do you call it, elections, guys. And let me know your thoughts on the elections in the comments below. I'll be interested to see what a lot of you think. So we're going to finish up on Euro USD. We're going to go to the daily, and we're going to do the exact same thing. I've already got them marked out for us. So same thing, if we want to see dollar eventually trade on lower, then we want to see if euro can show us some kind of strength. Now what's interesting is euro, similar to dollar, made a new low for the past 60 days. So I'm going to start from the last month's low, last month's opening price right here, and you can see we've just taken out that low. So what, we've accumulated south side liquidity of the past 60 days, which is significant. And then this is the highest high. So these relative equal highs are looking absolutely gorgeous. It'll be nice to see if price can manage to get up there. The fact that we grabbed these sell stops now, and oh, that's looking like a nice inversion fair value gap right there. We'll drag that through. As far as I'm concerned, price shouldn't need to drop back below that, assuming that dollar wants to do as we just outlined. So we have an inversion fair value gap traded through on the downside, closed on the upside. So now if price returns to it, we should expect to find support. Now looking at this, it's going to take a while to get price out of that, and it's not really surprising to me, especially as we're approaching the horrible month of December. But nonetheless, same applies. We're looking for support in any kind of discount, and we're looking to see if we can take, once we break that high, I'll be happy to start, you know, looking for more longer term positions and whatnot. So we've got some relative equal highs up here, buy side liquidity, and it looks unreal to get to right now, not gonna lie. But you know, this is all assuming that dollar does as we expect, as in this is displacement, and it is trying to fill this massive imbalance, and once we're below it again, it will help us with trading the pairs. But very difficult environments, guys. So yeah, you can still see we're staying in consolidation. Not really much more to say. I just don't want to see it take out any more lows. The more lows it takes out, the less likely we're bullish, right? We want to see these lows stay intact, especially when it comes down and grabs it and runs away like that. It's accumulation, you know. So I'm happy seeing accumulation. It's just as long as prices keep pushing higher, we know that it's likely going to be targeting our buy side liquidity up here. And look at these two relative equal highs. And then our first target would simply be these highs right here. So that's going to be everything, guys. I hope that all makes sense. I thought I'd do up-to-date range just because I haven't done it in a while, and because this is the most difficult trading conditions I've ever seen. We are approaching December. I don't usually trade at all or post. I usually do. Last December I done like 30 episodes of just straight back testing, so I do plan on doing the same and just scheduling them all. So I should look into getting that sorted. So that's usually what happens in the month of December. I don't usually do my daily uploads, and then obviously we've got 2025 on the way. But yeah, thank you so much for watching. Don't forget to drop a like, drop a comment, smash subscribe, join the mailing list, join the Discord, and yeah, I'll catch you guys on Sunday. Peace.